All right, so in this video, we're kind of going to be going over the strategy in live markets right now. Um, this strategy does have a win rate, so that means it does lose sometimes. It does lose, but most of the times you're going to win and you're going to catch those good trades in that hour. So what am I looking for? The first thing I'm doing is I'm going onto my daily and I'm seeing how market structure looks. We're bullish. We're pumping up higher. We pumped up higher again. What could we potentially take, or what did we already take? We took the wick high of this area right here, which is a draw on liquidity that got swept, and we're moving price below that wick. So that could be a potential bearish setup. Um, we still have these wicks up here intact if we did want to push higher. So that's why we're going down to the 4-hour and hourly to see the direction of the current hour. So what are we doing on the 4-hour here? Erase some of these lines. So yes, we had a sweep. Here on this 4-hour, we're rejecting this bullish candle. So this could show that we have potential buyers in the market, but we have to acknowledge that we swept a level where there was a lot of stop orders, meaning this wick right here. There was a lot of selling pressure right here, which means there was a lot of sellers in this area. We swept them out and we're pushing price back below this area. So we have to acknowledge market structure. Yes, we're creating higher highs, but what did we sweep? And we swept this wick high. So now I'm going to go down to, hold on, sorry. I'm going to go back down to my 4-hour. Now I'm looking at how this 4-hour is reacting to the previous wick. We have a seller's wick here, meaning price pushed it down. That's a seller's wick. And then this new candle manipulated into that seller's wick. So we have potential sellers in the market right now. And we're flipping back lower as well. So that can show that we have sellers in the market as well. Now I'm going down another time frame. This is my directional time frame. This hourly is going to tell me everything I need to know. What did we do on this hourly? We tapped into this bullish fair value gap, but we swept higher and we're closing below the sweep. We're moving below the sweep. There's a lot of sellers in this market. So looking at the previous candle, how could this candle react? We have a wick inside of this candle. Looking at this specific bearish candle, there's a wick inside of it, showing that price came, tested these sellers, and these sellers are still pushing it down. So from there, we want to see an inverse price leg. From there, we want to see an inverse price leg, meaning we want to see sellers completely wipe out buyers. So I don't even like flipping down to my 5-minute time frame until I see the sellers wipe out the buyers, meaning, let me see. Meaning a price leg like this has to get completely wiped out. There's too many buyers right here. I want to see it close below. Then I will get my entry to move lower. And what can we target? We have 830 data lows. That is our draw on liquidity. Looking at the hourly time frame, that is our draw on liquidity. It's right there. It's perfect. And it's also in the middle of this wick, which is, it acts like a fair value gap almost. The middle of wicks act as fair value gaps. And this is a bullish wick because price pushed up and closed up here. So this candle is most likely to come to this area, manipulate, do random stuff, sweep people out, fill orders, and then reverse up temporarily or just continue higher. So this area is a strong point of interest. This is where data lows was. If we go on Forex Factory, we can see there was news at 8:30. And price likes to sweep these areas. So understanding your draw liquidity, understanding your direction. What did we use for direction? The previous hourly candle. What did we do? We manipulated into that bearish candle, that strong bearish candle. We're rejecting this hourly gap. We're not really holding it. We're not really respecting it because we would have been flew higher. We're not respecting this hourly gap. This candle flipped back bearish after pushing up from this hourly gap. So the buyers did not win. And you could see just now it closed right here. So these buyers want to win. So we can use this previous hourly candle now. This is a perfect example. It's 11 o'clock. We can use this previous hourly candle to determine where this new hourly candle is going to go. So we have buyers within this wick because they pushed it up higher. And then we have sellers within this entire area. So Let's see if this candle manipulates into the seller's candle and then flips lower. And then from there, we could just target the draws on liquidity. Now we have this wick low where buyers are sitting, and then we have data lows. Erase this box. I'm just watching the hourly. I'm being very, very patient. I'm watching how the hourly is reacting to this hourly body. And we're just pushing higher. We're pushing higher. So we can take note of that and we can step back from shorts. We're being very discretionary. We're reacting to the market. We're not trying to predict it. We're just sitting back and we're waiting to see the move. In order for me to take longs, I want to see this seller candle get completely engulfed, completely eaten by the new candle. You can see it's rejecting that candle. It's rejecting these two selling candles. That shows that a lot of sellers are in the market here after that sweep. It's rejecting them. So what do we need to do in order to take shorts? We need to see this candle reject with a wick, put in its top wick, and then flip lower and then turn bearish. Turn to one of these black candles. And from there, we're going to scale down to our 5 minute to get an entry. And on the 5 minute, we pretty much just want to see an inverse price leg. I'm going to show you an example on the high time frame. This is an inverse price leg. We had buyers here, and then sellers completely inverse this price leg. So if we were in a bearish market, this would have been a confirmation entry. So if the hourly is showing me that there's more sellers than buyers in the market, we're going down to the 5 minute to see a inversed 5 minute price leg. We want to see the sellers completely wipe out the buyers. We can see that 5 minute candle's flipping right now. And you want to have a lot of patience when it comes to this to get those optimal entries. You want to trade when the volume is high. So if there's no participation in the market, it's kind of choppy. You do not want to put your risk in the market. Okay, we're rejecting this hourly candle. This may be the top wick of this new hourly candle, possibly. Make sure my mic is on here. Yeah, we're good. Okay. So I don't even want to look at my 5 minute until this hourly candle tells me what it wants to do. I don't even want to look at my 5 minute. And that's what helps you become more patient and more disciplined. You want to see you want to see where that hourly candle flips to. What does it have to do for us to buy? Like I said, it has to completely engulf this bearish candle, show me it wants to go higher. What does it have to do if we want to short this and target data lows and this low here? It has to completely flip, leave a top wick in this bearish range, in this bearish candle, and then flip bearish. Now I'm going to know that sellers are in control of this current hour. So seeing who's in control of the current hour, using the daily for direction, the 4 hour for direction, like ultimate direction, and then seeing who's in control of the current hour, because we can be on an uptrend, but for that current hour, we might want to go down for a little bit. So targeting those draws on liquidity and seeing who's in control. I still see rejection going on here, but I need confirmation. I need this candle to flip. And then we just got 5 Tradeify select account, Tradeify growth accounts. I'm excited for that. We just made what 1.5K on this Lucid Pro account. That's a funded account, and then we got these 5 evaluations that I'm excited for. And then we just locked in a $900 payout as well. This hourly candle, when it's a lot of hesitation, it might not be a good hour either. it might be time to just sit back. If the hourly candle is like stuck in a bearish candle, stuck between buyers and sellers, it's not necessarily flipping in a direction, showing you true intent, it's okay to fall back because then that's just consolidation on a low time frame. Literally. I didn't even like have to check to know that. It's just consolidation. So you just want to wait for that hourly candle before you even switch to time frames. This is also how we're going to pass very fast on these accounts. We know how to be patient. We know how to wait for our setup. We know what to look for. And that is how we're going to pass all of our accounts. And this strategy does have a win rate. There are times you might not make the trade because maybe you got direction wrong. But most of the time, if you're reacting off of the previous candle, you're going to win those trades. I see we're pushing past this candle. We're pulling very bullish. We reacted off of this bullish wick. And we may continue bullish after this. Because naturally, price likes to push down after it takes a large amount of liquidity, which we did here. Price naturally pushes down because it's, eliminating all those stop orders, people taking profit. There's a lot of like natural reaction in those zones that causes price to kind of push down a little bit. So maybe it wants to continue its path on going higher. I do see this candle's holding strong. It's not necessarily rejecting lower. Right, we could get a nice buy setup now. Now we're flipping down to our low time frame because it's showing strong bullish intent. So now I'm going to buy. Stop is at the low. Take profit is at the draw liquidity, the next high. And we're just going to wait for that to play out. Just because these accounts can be passed in one day doesn't mean we have to pass them in one day. We're going to take what the market gives us. Now I want to see strong displacement within this hourly candle. I want to see it go straight up. And also what I do see on this 5-minute is we completely inverse this bearish candle here, which is on a low time frame and inverse price leg. We completely inverse this price leg here. And once you inverse price legs and it shows who's in control, that's when you can take your setup and your entry. So we're kind of just waiting for this to play out. And this is how you're going to get those optimal entries every time and understand where the candle is actually going, just from waiting and not even looking at the low time frame until it shows you direction. And then we're just targeting our draws on liquidity, which was this previous hour high. I like to put my stop loss before the actual profit target so I can make sure it gets hit. And then we also have this high as drawn liquidity. What a lot of people do is trail instead of hit take profit. They'll trail it once it reaches their profit target. So if price came all the way up here, some people, instead of leaving a take profit, they would trail their stop loss up to that area just in case it wants to run. Honestly, if we could pass this account in one day, that'd be great. Profit target is 3,060. We can try to scale into this trade if it does go our way. Just add contracts. But you can see it's pumping. Like, even when my trades lose, it's because I held my trade. But most of the time, my trades have little to no drawdown. And if it does stop me out, it's going to stop me out fast. Most of the time, my trades just or goes into profit temporarily. And if it does reverse, it reverses. But usually the direction is right most of the times. And then again, I'm just holding my trade. I'm not bothering it. I'm not, this is natural market movement, markets to go up and down. But once you have an idea, you're not touching your trade. I'm okay with being stopped out because I have a valid stop loss and I have a valid take profit. And that's literally how you approach these markets. I'm not trailing it. I'm not moving to break even. This is a evaluation account. Also, if I'm trailing it, as soon as it pumps up a little bit, I'm not giving my trade enough space to breathe. Maybe it wants to come back, retest this area, and then pump higher, retest the buyers here. I'm not giving my trade the space to breathe. So, like, what was the point of the stop loss in the red box here? There's no point. So, understanding that you have to give your trade space to breathe and trusting your idea and your edge will get you very, very far. Because more so of the times, if you're just following your strategy over and over again, you're going to hit take profit eventually. And your take profit is going to pay you more than the losses. Because I'm literally risking 800 to make 1.9K. So imagine if I lost 800 twice and then made 1.9K. I'm good. I'm chilling. I'm chilling. If this trade lose, this is a good example of this. Every trade loses. Every trade has a win rate. And it is okay to take losses. So we just swept this high instead of break above it, which is a sign that we could possibly flip bearish. And we're also understanding that we're still within that hourly candle. We just swept the high of that hourly candle. We're still within the hourly candle. So this could possibly hold bearish, but I believe it's going to hold bullish structure. And the pull back downwards was temporary. So we're just going to hold the idea. And like I said, this is just natural reactions to when we take liquidity, hit stop orders, take profits. This is just natural reaction. So reacting to every natural reaction is going to send you on a spiral. You don't have to react to every natural reaction that the market shows you. These things happen. You're literally a day trader. The market moves up and down all the time. Just hold your trade. Just hold your trade. You're going to have to get used to it. We're just going to wait this trade out. Trade is looking pretty good. We're not breaking even until we're at a 1-to-1, meaning until I'm at 850 in profit, I'm not breaking even. There's no point. I'm letting my trade move and I'm holding my risk. I put risk into the market. I understand that it's my risk, so I'm gonna keep it there. I said I'm able to give the market this amount of money. So why am I not giving the market that amount of money to make a certain amount of money that I want? There's no point in stopping your trades out early. Unless you absolutely need to break even or you see something funky in the market. But little movements like this is not funky. I'm telling you. It's natural market movements. All right, we're getting that pump higher. This looks amazing. Mind you, this was one trade. This was one trade, one take. One trade and one take because I was going to share my loss as well. If this loses, I'm still sharing it. But this is literally just how my strategy works. And then you have to generate that patience yourself. It's all up to you. It's you versus you. And if you can't have that patience for yourself, this skill is going to be very hard. It's going to be very, very hard. It's you versus you. If you need help with gaining patience, or if you need to help yourself with gaining patience, allow yourself to Sit off of your devices, be bored, sit alone, sit with your thoughts, and that will give you a lot of patience. Just sitting with your thoughts, not getting all the dopamine hits from scrolling on your phone and all the unnecessary stuff. Just cut it out for a short period of time, 2 hours a day, and you will have way better patience, I'm telling you. But if you do practice all those things and you just lack patience in general, I don't know, you might have to pray about that one. I don't know. But for me to practice patience, I literally just turn my phone off when I'm focused on anything else, that doesn't involve a phone. I don't need to be checking my phone every 5 minutes. That's what's wrong with my generation, unfortunately. Um, when I'm studying, I'm not even responding to text messages, calls, none of that. None of that. So, gaining that patience comes from, well, one, if you got kids, but gaining that patience comes from getting rid of the unnecessary dopamine. You don't feel the need to do something, you don't feel the need for entertainment. Being okay with being still and being bored. It's literally in the Bible. But I'm not gonna talk about religion because I don't know who here, you know, I'm not gonna talk about religion, but be still. Let go. Let yeah. Be still. Let go, let God. You'll be rewarded more for being still. Alright. So this is looking pretty decent. And then again, if you want to check on your trade, and then this is when you can like break even if it looks crazy. If we're like this high in the premium, right, and we're starting to reject from this bearish candle, strong rejection, strong wick, we can automatically assume that candle's probably gonna cook us decently, and that's when you can break even. But if the hourly's pushing perfectly, it's making minor pullbacks, minor pullbacks into PDRAs and confirmations. There's no reason for you to be exiting out of your trade or trailing it on its butt. It's no reason. And then we're just using market structure as well. What are we doing? We're extremely bullish on gold. We had that minor liquidity sweep. It pushed us lower. Yes, minor shorts. I actually took these shorts because I saw that hourly react to the previous hour. Beautiful shorts. I took that on the other account that I just showed. That's maxed for the day, 1.5K. Um, but yeah. And I actually took these longs somewhere down here. I took these longs. It was crazy. And I was gonna hold all the way to this level, but I trailed it way too fast and it took me out. And then I'm gonna acknowledge that I kind of like that kind of like messed with my brain because I had an amazing trade. It was up in profit, deep in profit. Um, I trailed it too fast. It broke me even at 500 and then flew straight to TP. I literally missed out on like 1.6K on that account. I locked it out at 500. Um, because I did feel some type of tilt, but I just locked in my payout and I was chilling. But that's a prime example of why you should just trust your trade idea, trust your target profit or your profit target, and not try to go for, crazy big wins either. No home runs. Because that cooked me on a different account. I was trying to go for a home run because I missed my home run and it sent me on a spiral, like a whole spiral. So I still experience tilt as well. I just know how to manage it a lot better than how I used to. Like I'll lock myself out of an account or maybe trade an evaluation if I need to trade paper trade. Just avoiding touching your business accounts. Avoid your business accounts at all costs. And I'll lock myself out for the day. I have strict risk management when it comes to my accounts. But when it comes to not holding your trade, trailing it too fast, just stick to your trade idea. And you're going to be rewarded more times than you're stopped out. And that's literally how I've made so much in profits. So I don't even know what was going on with that. Honestly, I think it's because I'm going full time. It's a whole nother mindset, honestly. But right now, I think I'm pretty sure I'm back to trading normal now. I'm chilling now. Now that I've acknowledged it and said it out loud, I'm chilling now. I don't think I will ever trail another trade. That's not even how I trade. This is how I trade. I only break even at 1 to 1, and I'm letting my trades run. So I love keeping it very, blunt with you guys, keeping it legit, because this industry will make you emotional. It's you're dealing with seeing your money, either fly without you or you losing money. It's a very emotional industry, especially if you had like money issues growing up, if money was scarce in your life. Um, it depends on your relationship with money. So I would never lie and tell you guys that I am all perfect when it comes to trading. No, I'm not. But I've created the proper, risk management to keep me from me. And that's what keeps me going. That's what keeps me, keeping my accounts and making these payouts. I understand that I need risk management in a risky business. And I've learned to detach from the outcome of my trades. Like I don't even care if this comes all the way back down to my stop loss. I've learned to detach from the outcome at all costs. Because even if I don't make this trade, I'm going to make some more trades. I don't care what happens to this account. I'm just going to trade normal, execute, and do my job for the day. And that has gotten me extremely far as well. I do not care what happens to these accounts. Not at all. I'm just here to do my job. Whether I get stopped out for the day, whether I hit take profit, I'm just here to do my job. Get an entry, have a take profit, have a stop loss, let it run until I'm at a 1 to 1, and then I'm done. That is my job. Nothing more, nothing less. If stop loss get hit, I did my job. Take profit get hit, I did my job. And because I'm just showing up here doing my job every day, I'm getting paid more, way more than I lose. Trust, way more than I lose. So just show up and do your job every single day. And don't try to force your job either. Only do your job when the market deserves your risk. That's the only time you should be doing your job. I want to see more movement coming out of this. I understand that it's 11:23, but I'm not trying to be looking at a trade all day. Also, don't be too hasty when you're seeing these hourly candle reactions. And you see it move up a little bit, see it move down a little bit. Don't be too hasty unless it looks good. The only reason I should be taking this trade is because I seen us having strong bullish pressure inside of a bearish wick. That should not be happening if this bearish wick is holding bearish. But if you see a little bit of buying pressure in this like full bearish candle and we're like down here and we're not, testing this wick yet or breaking it, there is no reason, I'm telling you, no reason you should be entering a buy. So that's when that patience, like I said, comes into play. We're going to break even here in a little bit. That is when that patience come into play. And this whole video was very, authentic. This is the only trade I've taken. The only trade I've taken. Because what I like taking multiple trades, I don't even get multiple opportunities because I'm only able to trade at the top of hours or at specific times. So this was the only trade I took. Because if I did need to take multiple trades, it would take multiple hours for me to redo it. So this video is very, very authentic. I hope it's not too long, honestly. But I'm glad you guys could, have like a real experience almost. If you are staying to watch this whole video, you almost got like a real experience here. Because God knows I'm not editing this video. So the whole video is completely, completely natural. And we're going to scale in here because we need to hit 3,060 to pass this account. We're going to scale into this trade if it can pump up higher. If we get a strong pump higher, we'll scale into this. We never hit a 1 to 1. So I'm not even going to break even yet. But I love how this 15-minute look. We have an inverse price leg. There's nothing about this trade that's telling me I need to break even really quickly. Inverse price leg, a strong push higher. I want to see higher. I want to see higher. There's no reason we should come all the way back down here. I want to see higher. And if we do, the trade is invalidated and I'm okay with that. And I am not attached to the outcome. We're moving. And you can see how long I've been waiting on this trade. I haven't touched it. I haven't bothered it. I have a specific target and a specific loss. I don't have any reason to bother the trade, honestly. And I hold my trades for like a long time. Wonder how long this video is going to be. But yeah, my stop is at the low, the intermediate low on the 5-minute. My 5-minute low, after I inverse the price leg, my stop should be at the low because sellers should not be able to push price back down to that level that we inverse the leg. So I always put my stop at the swing low or the swing high. I don't use static stop losses or static take profits, meaning the same number every time, because it's always going to be different. I'm just risking 1K a day because these accounts are meant to be leveraged. So I'm leveraging half the account a day. But I do have a different sequence when it comes to getting a payout on how I leverage it to get the payout. All right, we're getting some strong selling pressure here in this area. We're going to watch for that, and we're going to watch how strong it is as well. Our hourly time frame. Let's see if we're rejecting this bearish candle. If we're having strong rejection or just minor rejection. Use my message sending, texting a student. Okay, we're lacking PD arrays here. Like, I don't see, this is all low resistance liquidity at this point. Okay, we're gonna break even. We're gonna break even. This is all low resistance. There's like nothing showing us that we're gonna continue higher. And what I mean by low resistance is there's no type of fair value gaps. There's no type of bullish confirmations in here. Maybe the wicks and the candles formation. But other than that, this is all low resistance. There's no imbalances. This could reverse. lack of imbalance show that there was lack of proper displacement, meaning sellers had enough time to step in and take over for a bit. So we're gonna be very careful with that. This is a moment where you will want to break even. Oh, we have a 15-minute here. That's perfect for our break even actually. We have a 15-minute that just opened. If we don't reject that, I don't even want the trade anymore. To break even. Okay. Yeah, we flew straight through that. All right, so this was a break even trade. This was a beautiful setup, honestly. Maybe we can get a re-entry on this if the hourly wants to continue higher. But we want to also, pay close attention to what it's doing. Strong rejection at this bearish candle. Lack of continuation, a possible flip lower. So whenever you get stopped out, you do not want to rush into another entry. That's how a lot of people get cooked. When you get stopped out, you want to sit back and reevaluate. Remain discretionary and understand who's in control of the markets. So that is how I trade. I'm going to end this video because this video was kind of long. And I'm done trading for the day. I'm no longer trading, any of my evos on a Friday, which is kind of crazy. We kind of caught a good setup for a Friday. But yeah, that's the end of this video. I hope this video helped you with my strategy and understanding the ins and outs of my strategy. I am going to be creating way more videos that goes into depth of the different parts of my strategy, such as candle reactions, market structure, um, auction hours, which hours, have the best volume, the best participation. We're gonna also go over different draws on liquidity sweeps versus break structures, different things like that, and inverse price legs. So this was the first video out of many. Actually, we have other videos in the Discord already, but this was the first video of me kind of explaining my strategy and showing a live example as well. But we're going to have more videos to come. And also, it's okay to take another trade if you get stopped out. It's okay to be patient, see another setup, and see how the hourly is reacting. Me personally, if we're deep into the hour, like it's 11:32, if we're deep into the hour, I don't like trading that same hourly candle. I want to see how the next hourly candle forms if that hourly candle got stopped out. And that's only if it's a high volume hourly candle. I don't usually trade the 12 o'clock candle. The 12 o'clock candle typically, doesn't do well with my strategy, so I'm gonna hold off for the rest of Friday. Um, but yeah, that's my strategy. That's how I trade. If you guys are interested in trading in that way, stay tuned for more videos. This is going to be the start of a group mentorship, meaning everyone in this Discord is part of the group mentorship. I do have one-on-one mentorship students, which means their experience is more personalized and we cater to their not orders. We cater to whatever they need help with specifically. I say cater to orders. That's what happens when you work. When you work. But I cater to that person specifically, what they're going through, what's challenging for them, and what we can do to fix it, assignment wise, um, understanding what risk settings we need to put into place to help that person. So one-on-one mentorship is available to my Discord students. But this will officially be a group mentorship, meaning the prices will be raised. So you guys did get in at a very discounted price. The prices will be raised now because there's going to be a complete playlist of every single part of my strategy. And you guys are going to know the ins and outs of the auction model. And you're probably going to be hitting crazy trades. So we can't, really keep this Discord too cheap. It's too much sauce. It's too much sauce. But you guys definitely got the prize. You guys definitely got in here early. And you guys definitely have full access to my complete strategy. But if you do need one-on-one mentorship help for risk management, understanding sizing for these accounts, let me know. And we can figure that out, plan it out together. But I'll see you guys. I'll see you in the next video. I'll see you in live trading. I'm out of here.